The Edgeless Horseman here. It's May 10th, 2022. Very interesting day in the markets. Pretty much everything was being sold across the board. Metals, stocks, cryptos were absolutely slaughtered. Yeah, I mean, it was, sell everything day pretty much. And which is not unusual, and which I already predicted that every additional day we're seeing, down movement in miners. There's gonna be people crying all the time, and that's never gonna stop. It's just gonna, uh, yeah. I mean, that's story all this time pretty much, and I would advise everyone to like, for the love of God, don't cry. I mean, if the more you whine, etc., the more you're basically saying that you're a victim and everything is hopeless, etc. And more importantly, it just suggests pretty much that you're getting emotional and don't really know what to do. So you're going to get do worse and worse decisions simply because you are becoming more emotional. And as we know, the more emotional you are, the worse decisions you tend to make, and that's why dead investors tend to outperform the living, simply because they don't have emotions. They cannot sell at ridiculous fire sale prices, and they cannot chase and buy in when something is, way overstretched in terms of price to value. And more importantly, I mean, what I find interesting is like, okay, why are most people in this sector? Why do people invest in gold, and why do people invest in gold miners, for example? I would suspect it's because they are bearish the world economy, the financial system, the monetary system, the debt bubble, cryptos, everything artificial, pretty much, and are bullish on real assets, especially the longest living form of money that we know of, which is gold, which has been around for 5,000 years and has survived everything, never lost a battle, seen currencies, including world currencies, come and go and come and go, seen empire fall, empire rise and fall over the millennium, over thousands of years. So what I find interesting is like when you're looking out there right now, what does it look like? It's looking like we're starting to get into some kind of end game, basically. So, okay, given what you saw today, for example, markets crashing, inflation still raging, yada yada yada. Would you say that is the world economy and the debt bubble, etc., looking like it's doing better or worse? I would say it's doing worse. I would say that we're at a risk of global recession. So basically, the what most gold bulls are in this sector for is looking like it's accelerating. So in that case, that means that physical gold is probably in an uptrend. And it appears that, I mean, since nobody's really awake out there in the broader masses, again, Dogecoin still, I think, is worth a few billions, etc. So we're really not in the, terminal phase. Well, the system is terminal, but we're not in the sheer panic phase. Most people are not fleeing to real assets, etc. I mean, probably a bunch of smart money is, but most people are not. We're not in a precious metal mania right now. I mean, obviously, we're at the highs at the 2011, and I mean everything's gotten worse since then. So we're seeing the world starting to fall apart at an increased pace, especially since the Ukraine war. So everything we dreamed about from a gold fundamentals perspective is playing out. And as that plays out, people get scared. You see overvalued stocks crashing and continue to crash and crash even more. And you see people sell everything, like the saying is, you don't sell what you, or you don't sell what you don't want to sell, you sell what you can sell. And paper gold is obviously a very liquid market, so when people have margin calls in stocks or whatever, and there's no bids in said stocks, I mean, those people will probably sell the much more liquid paper gold market. Okay. And still, gold was down 1.3% or whatever, 1% perhaps, for a while at least. I mean, I think it actually ended perhaps 1.5%. But regardless, that's not even a big move for gold. But what happened? Miners got absolutely slaughtered. Juniors got slaughtered more than I've seen in, well, maybe one or two times in the last 2 years or so. I mean, they're absolutely hammered, and what makes that even more interesting is, of course, that everything should be taken into context. To see like Tesla crash 50%, that shouldn't come as a surprise. I don't know even know if Tesla is down that much, but like any of these, let's say, nosebleed valued tech stocks, if they go down 50%, that's something you would expect because gravity is down because they're so overvalued. And they can go down 50% and still be overvalued. That's risk to me. Overpaying for something that should go down and forever stay down until or unless something improves. That's risk because that should be a permanent loss unless we go into another bubble, of course. That's risk. But miners, gold was barely down. Oil, which is, for mining companies, that's an input cost, obviously, that was actually down. I think gas prices were down a lot. So, I mean, at the end of the day, you cannot explain it from a rational perspective except the fact that everybody panicked today and sold everything. And perhaps people sold mining stocks to shore up cash or whatever. I mean, there's probably a bunch of people. I mean, there are obviously overstretched people in the junior space and mining space. I mean, I'm pretty much all in with all my investable capital in juniors. So it's like if I would panic, let's say, I would be selling everything, obviously. And since a panic entails not caring what the price of something is versus the value of something, you would just, sell across the board. But that is like my, another evidence of, I don't get how people can say the market is always right. You cannot explain why everything went down today, especially since if everything going to shit, that would benefit gold the most. And gold was barely, I mean, down a bit, but miners got absolutely hammered. And what does miners have? They have physical gold in the ground, or many of them have at least. So it's like, you can't explain that. I saw some juniors down 15, 20, 25%. Nothing at all happened to the company, obviously. Who knows, maybe some actually, made a discovery today that we'll be learning about in the future. But you cannot explain that price movement except from panic selling, capitulation selling. And that's why I keep talking about if the dead outperform the living, okay, that means that not only should you be as, emotionless, let's say, like the dead to have a chance, but you also, in order to have actually really great long-term results, you have to take advantage of all the mistakes that the living do in order to underperform the dead. And today was a perfect example of that. People are willing to, since the last trading day, which was Friday, people were willing, or maybe not willing, or forced, or stop losses, whatever. People sold shares, ownership of gold companies for up to 25% less than they were happy to own them one market day ago. So should we believe that some of these companies actually went down in a quarter of the value, disappeared, starting off from ridiculously low levels? No, of course not. But this is a momentum game. That's why you've seen the tech bubbles, etc. I mean, that's what I find interesting. People cannot fathom that something can, like the juniors, can stay cheap for, let's say, 12 months or 2 years, but they have no problem calling cryptos overvalued, or housing market overvalued, or Tesla overvalued, or any of these high flyer tech stocks. They've been overvalued probably for years. But in that case, since their bias is that that's overvalued and they don't own it, then they're like, yeah, okay, that's been overvalued for a long time. But when it comes to something they own that's going down, or staying down, or going down more, like the junior miners, they can fathom that they're actually cheap and have been cheap all along and just are getting cheaper. Now, in that case, they feel like I must have made a mistake. So that's like there are a bunch of things that you see people say on Twitter, etc. It makes well, it might make sense, but in that case, they're hypocrites, because it's I mean, it's human nature that's driving both the upside and the downside. So why on earth can't Tesla reach a PE 100, for example, and at the same time juniors, etc., stay cheap and get even cheaper? No, that makes perfect sense. And crypto's going up for years, and mining stocks going down for years, because they're the polar opposite. One is real and one is artificial, and it's been an artificial bubble. Unfortunately, now when the bubble is imploding, everybody's panicking, and people are getting emotional, and they're selling stuff they perhaps shouldn't sell or don't want to sell, but they feel forced to sell. And at the same time, okay, yes, that's the mining stocks, like physical gold and silver. That's my hedge to my mining portfolio. My mining portfolio is to create wealth. Physical gold and silver is to preserve wealth. This is the gold price of 10 years short of the gold price in Swedish crowns. It's doing its job. Yes. And this is not for trading, obviously. That's for the really end game and the aftermath of the end game. And let's look at silver coins. I think Apmex is one of the largest. I think this is. Well, I googled Apmex. I don't know what kind of website this is. Anyways, like, look at the silver coins here. Awaiting stock, awaiting stock, awaiting stock. This is the American ones. Look at the prices: $31, 33, 35, 40. Let's look at Silver Britannia. Best value 25. 2025 Britannia 26. Awaiting stock, Canadian Maple might be more accurate. Okay, 26, but that's awaiting stock as well, and the prices are fixed at the same, which looks kind of weird. Anyway, point of the matter is that you can't get silver even in US dollars at the US silver price. So if again, that's what doesn't make any sense, for people to always look at paper gold and silver, because you don't even own that. You own the companies. Yes, if you're a producer, you get paid at the paper price. That makes sense in that case, and that obviously affects the business in itself. Sure, but if you're in a junior whatever, it's like they're so far from actually producing anything. And if you have a producer whatever, it's like, I mean, this is probably doing a fat cup and handle, so that's gonna probably go up anyway. But if I mean, your physical gold and silver probably is doing better than you think, and the companies are doing worse than they should, and you're looking at paper gold and silver all the time, which makes no sense. Otherwise, one of the best examples, I think, this is one of the quote trading sardines. It's a prospect generator cashed up with equity holdings, royalties, and like 100 properties. Strategic metals. Look at this is now, after today, crashed down to this level. Can you see what percentage of time spent is around this level. Well, we're here now. It touched this and grinded here for a while before going up. Made a brief stop here before shooting up like 25 to 80. Yeah, let's say 250%, whatever. Brief stop here before, I don't know, doubling. Brief stop here and then grinded a bit. And for a few months it actually stayed below this level. And that was the major 2015-16 bottom before it ran higher, and before that this was the 2008-9 crash. This is what I'm talking about. Everybody's scared to death to buy right now. But you can pull up any chart of any trading sardine or any sentiment indicator or whatever, or look at how companies are valued ounces per or dollars per ounce or whatever, and you would see that this is like the extreme range on the downside. We will not spend a lot of time at this level or lower. And when we turn higher, which we will, 100% sure we will, many juniors will go up several 100%. And I don't know when, I don't know what way it takes, I just know it will. They will. And my single job as a value investor is to buy something that is cheap. And I hear people, like I talked about, they say if you bought here, which, this company was cheap here, and it fell. Some people argue with me that it wasn't cheap then. Their evidence is that it went down in price. That's like saying that Bitcoin wasn't, or Dogecoin wasn't expensive at whatever, $16 because it went to 40. Now I would say that $16 was extremely overvalued already, and it just became even more overvalued. So that argument doesn't hold water at all. But traders think like that because they want to be correct on the direction right away. I don't really care about direction. I care about a future end goal, a future price target. Or not even a price target, perhaps. That, hold a growth stock that's probably going to grow 50% per year for 3-4 years. And if I don't make money on that, it's like, yeah, I would be surprised. And if I'm right, maybe, or let's say if it goes well, and sentiment at any particular time is with me, we go into a sentiment high and the stock has grown like, let's say 200-300% over 3 years. Yeah, it could be up 600%. That's my game. I don't play the guess which direction company X is going to trade tomorrow, next week, next month, or whatever. But I have an estimation of where I think they're going to be trading in like 3 years from now. And that's why I tweeted today that from these levels, I wouldn't be surprised to see my entire portfolio be up 500% within 3 years. Simply because of the terrible past, which means that the future gets brighter and brighter. And that's also, I've shown this many times. This is Strategic Metals and Bear Creek Mining. When people, it's like some guy made a comment on Twitter that he said, yeah, well, you've been bullish for, months now, and you're probably down 30 to 40%. And I just said, so what? I've been down over 50% 3 times since 2015. But people literally cannot fathom how you can sit at paper losses and make money in the long term. It just blows my mind. So everybody assumes, because that's typically what they did, people buy in high, sit through this, and then they say you can't make money in the mining sector. No, you can't make money in the mining sector. Most can't make money in the junior sector. 19 of 20 people, or even less than that, or even more than that, can't make money in the mining sector. I can suffer the declines because I'm always during the bottoms. And this is of course a trading sardine. That's like people saying now, well, you must be you can't have made any money on GDXJ, for example, because we're down here. and everybody looks at the recent past, because that's the time, that what affects them. So they're seeing this and say nobody can make money, and if you're down now, you're a sucker. Yeah, what if you bought here? But that just proves my point that nobody has any real time horizon that is longer than, like, everybody looks at this and tries to guess tomorrow's price. That's what everybody does all the time. That's why they buy up here, sell down here, because they project everything forward. I mean, take First Majestic, for example. I sold that, I think, around here or something. It went up here. It way overshot the value of the business. I think actually, I remember, I think it was like, I thought it was pricing in a silver price of like $30 when silver was at 20. But people looking at the past, recent past, felt better and better about buying. Like they felt worse and worse about buying here. So the worse the future expected returns becomes in goddamn any asset class, the more bullish people get. And the better the future returns are, more and more people are inclined to sell. Why do I think I have a bright future? Because we're here right now. So I think the future is brighter here than it was here. The future will be even more bright than it is here at this point than it was here. So any additional downside I have in my portfolio and juniors overall means they're gonna go up even more in the future. Because if I'm right on average on most companies, that means their intrinsic value is a lot higher than it is now, and any move down from here, and for some time already, just brings them farther away from said intrinsic value. And as long as the company keeps on growing, that means that the gap to the future, whatever, how long time period you might have, or how long you think a company can grow and create value, this gap is just going to increase. And what I find interesting about today is that it kind of looks like capitulation selling. Big gap, way overreaction in miners. Way overreaction. Gold down 1.3%, miners absolutely crushed. Nobody cared at all about what they were actually selling. Nobody. I didn't see a tweet all day. I haven't seen a tweet for months where anybody who's thinking of selling or just sold even mentioned valuation. No, they sell because they are trying to guess what the future price is. They're selling because they think price is going to go down. Not that they own something that's going to go up one day. No, they are selling simply because they're momentum traders. Almost everyone is a momentum trader, or a trader of some kind at least. And that's why people cannot fathom how you can see these corrections. Even those like, listen to Charlie Munger, who is obviously one of the absolutely best long-term value investors there is in the world, who said that if you can't stomach a 50% correction, you don't deserve outsized returns. And I don't know how many investors who have said that it's pointless to try to time the market, try to time the tops and bottoms. And more money, as they say, has been lost trying to time bottoms than actually, occur during bottoms or corrections. So I mean, that's what I find absolutely priceless. You have the best investors in the entire world with proven track records who literally say you shouldn't fear, I mean, assuming you have a good company, you shouldn't be surprised to see 50% corrections now and then. And especially, I mean, in the mining space, again, this would be, if we reach 50, or if my portfolio would reach 50% correction, that's my fourth since 2015. And they say don't try to time the bottoms. I'm heeding that advice. I'm chill. I've seen this move before. I've been down more than 50% during this time, and now we're here again. So I've seen this movie play out many times before, and I have yet. I mean, the one thing I pride myself on is like, I don't want anyone in the entire world to be able to buy a high quality mining stock cheaper than me. That's one of my, goals in life, basically. To have nobody be stronger mentally than me. Because if I sell at any point in time when it's cheap, I've already lost. Because that's how my strategy is. Buy cheap, sell when it's not cheap. Sell when it's expensive even if I'm around that long in a stock. That's my only goal. That's my only criteria. And I've seen some people today, they agree with me, yes, juniors are cheap, but... and they're thinking of selling. And I just responded with, I have one criteria, that it's cheap. I don't have a criteria that says, buy if it's cheap and XYZ. Because most people are looking to buy cheap and feel good about it. It's like, welcome to how a crash works, or capitulation works. Capitulation, by the very definition, means capitulation of investors' psyches. Their minds capitulate. Their rationality capitulates. So I don't know who ever came to the bright idea that it would ever feel good to buy during a crash, to buy during these times. No, it's supposed to feel shit. The more shit it feels, the better it is. So if I start to put on other criteria, that it has to be cheap and I need to feel good. Like, it has to be cheap and I need to have a 200% return over the last 6 months so I feel good about myself and have some confidence and conviction. Yes, then I can buy cheap. Good luck finding something under those conditions. That's why you have to stick with one absolute rule. If your rule is to buy cheap, buy low, sell high, you have to stick to that. There's no ifs and buts. There's no buy low or cheap, but it has to feel good, or I have to be bullish, or my neighbor has to be bullish, or I must have seen 100% jump in share price or whatever before I buy in. It's like, yeah, good luck buying low. But that's how people work. They think they can find that perfect opportunity where it both feels good and is cheap. It's like never gonna happen, my friend. Yeah, I don't know if there was any more points. No, it's like, this is how the markets function. This is how the markets function. And if I'm kind of right where we are, oh, and one additional point. I might have said it already, but it's like, if you if you have a problem buying juniors right now, I mean, this is GDXJ. Juniors are already. I'm seeing micro cap companies back to 2015-16 bare bottom valuation in absolute terms. Juniors with multiple assets, a discovery or two, trading at like 8-9 million with like 4 million in cash or something like that. I mean, during these bottoms, they might have traded at like 6-7 million market cap, but had no cash. And I mean, this bottom, and you can see the strategic metals, during this bottom, gold was at 1,100 approximately. Silver was at like $12. Juniors had absolutely no cash. Most were running on fumes. Some had like $200,000 in the bank. Producers were losing money hand over fist and were in debt. Many were near bankruptcy, and many had to sell. Barrick had to sell their assets at fire sale prices because they had so much debt. At this point in time, bankruptcy was real. Risk was real. Almost every project at the time were worthless. So what I cannot fathom is like, when people have the audacity to say that they're gonna beat this market and buy low, because that's typically how you beat the market, by buying low. but they cannot buy in this environment. They would have absolutely no shot of buying when I started buying, because this time, this bottom here, and now with the juniors back to these valuations which were present here, this was 5 times more risky than right now. I'm buying juniors, I'm buying microcap juniors that are all cashed up, many of them cashed up within the last month or so. And people still cannot buy them. But they try to pretend that they would have any hopes of actually being strong enough to buy this bottom, where risks were like massively higher than now. Here we were near bankruptcy in a lot of cases. Here the whole sector was absolutely trash and worthless on paper. Right now, at this, when juniors have gone to, and especially microcappers have gone to the exact same price levels, the producers are doing close to record cash flow, and the juniors are cashed up, and you see insider buying, and people still cannot get themselves to buy and try to rationalize why they should sell. It blows my mind, but that's also why I know I'm gonna absolutely crush this market. Probably as long as I invest, and who knows? Maybe I won't be in minors forever. But it's like human nature does not change. It's our job to know to first of all have a game plan, have a strategy, and know what everybody else is doing wrong. And right now, during capitulation bottoms, etc., the mistake people do, they're selling because others are selling. That's the only reason they're selling. They're not selling because in their mind the case just went bad, or they put some numbers into their spreadsheets, like, oh, okay, all of a sudden with gold down 1.3%, junior X, according to my calculations, is worth 25% less. Of course not. So people are being extremely stupid right now. People are always extremely stupid at extremes. People were extremely stupid buying First Majestic up here. They took on a huge amount. Okay, this wasn't First Majestic. Here, this was stupid. This was stupid. This was stupid. This was stupid. It was stupid. Okay, not perhaps First Majestic, but like juniors. Okay, I should say juniors instead. Here people were stupid, probably stupid. We're just back to people being stupid and selling stuff that's typically within 4 years is going to trade for 4 times as much. Because what we know is that the same ounces in the ground oscillates, like sometimes when sentiment is high, they might be valued at $80 per ounce, and in poor sentiment maybe 20. Exact same ounces. So that's one of our game plans, obviously. We know that sentiment always changes. So one way to play this market is simply buy when it's extreme pessimism, wait for extreme optimism, and you'll probably make a few 100% if you're diversified in some optionality plays. Me, on the other hand, I prefer to have growth stories where the highs at least are higher, and the highs typically are higher, so I get paid to wait, so I don't need to time a top, so I can hold forever and just try to buy more and more at every sentiment bottom. Again, this is not rocket science, but if this correction goes on for, who knows, I mean, if we're around here, I mean, that's still a few to several months before we put in a final bottom. It went up. Here it actually just grinded from gap down August until year end. So that's like 4 months of just grinding before it headed higher. So we might be in for like 4 months of grinding, or we might grind and go a bit lower. And every day this sector is down, people are gonna go crying again because they have no idea what they're doing. They have no idea what they're doing. They have a time horizon that is next tomorrow, basically. And they have no idea that sentiment always changes. And you could wait 4 years easily to get a 200%, and you should be happy about it. I think there are a bunch of juniors right now that when we get to the next sentiment high, I think some will actually go up 500% to 1000%. I mean, literally just from today, seeing the price go down. I have some micro cappers on a, let's say, a watch list to add, and I think my no-brainer risk reward buy list jumped from like 50, 60 names to like, or maybe actually like 40 names to like 80 names just from today's movement. Just from one day of this spike down in price, put, in my opinion, a whole trough of juniors went into the no-brainer risk reward, and I picked up some micro cap juniors that are, again, that are selling at valuation seen in the 2015-2016 bottom, even though they're cashed up, have many projects, and their future looks brighter than ever, pretty much, from a fundamental basis. So I think some of them, when we get to the next sentiment high, I think some will, like Bear Creek Mining went up like 600% from the bottom to the peak. I think some of these microcap juniors are gonna go up, yeah, several 100%. Not everyone, but many of them, and they're gonna pay for a lot that don't. But the trick is to obviously hold on for that long. If like, why do you think, the, let's say, most successful hedge funds, or funds overall, I mean active funds, they tell their investors you should have a time horizon of 3 to 5 years. That's typically what it says in their prospectus. Why? Because they know that anything can happen on a shorter time frame than that, and their superior investing skills will come into play over the long term when the market has gone from a voting machine to a weighing machine. And that's for the overall stock market. The mining sector has more 50% corrections and bear markets. Like what? The stock market has a severe bear market or correction every like 8 years. In the mining space, we have one every 2 years. So you gotta have, it's like, if you start to judge your results, if you bought in here and you're looking at this sentiment trend and you expect that that's a fair representation of your investing skills, then you're just dumb. If anything, you should measure from here to there, which is around 4 years, or yeah, top to top 4 years, etc. It makes no sense to judge where it's like now my portfolio, for example, we're at a sentiment low right now. Within 4 years we'll hit a sentiment high, and my portfolio is going to be up a few, several 100%. But I can't judge my returns like, I mean, typically most people, that's why, that kid I talked about a while ago, he retired at a extreme sentiment high in a stock because he thought now the coast is clear. No, I mean, that was way overstretched. Now we're way understretched. So don't be too hard on yourself at the same time, because the only way to make a mistake, if you bought here and sat through this, selling here is worse than buying here. Because if you pick some better companies, even if you're down 50%, you're probably gonna find this company cheap enough that they'll go up 400% to the next sentiment high. So always have the time frame in perspective. That your results are gonna probably look way worse than they are if you're down here sentiment wise, and your future returns are going to be absolutely atrocious if you sell at these sentiment lows. Yeah, thanks for listening. Yeah, I mean, again, it's like the markets are what they are. I mean, there's a reason why it's brain dead, and volatile sectors are hard. But at the same time, if you understand what's actually going on and what everybody's doing, you can make really good future returns. The thing is obviously to think about the future, not where we've been. Thanks for listening. Bye.